to Surviving the Slowdown with me, Shaili Chopra. The episode this time focuses on banking, what really makes up the backbone of any economy. We try and catch up with 3 key private bankers across the country and get a sense from them as to whether the sector will remain in a struggle and challenging mode over the next 2 years.
Everybody desires a higher rate of growth, and the pace that we are setting in terms of various things we are doing, I think doesn't portend that we will come below 5.
We're not getting 15% money supply growth. If you don't get 15% money supply growth, you're not going to get 15% deposit growth.
Private sector has benefited from wonderful valuations, and that has allowed it to raise capital, and fuel the growth.
The writing is on the wall. The Indian economy is in dire straits. Growth has slowed down, the rupee is falling, investment has declined, and inflation is stubbornly high. The only way to get back on the growth track is to revive consumption, exports and investments. But interest rates are high and capital for investments is tough to come by. And HDFC Bank's Aditya Puri says another rate cut seems highly unlikely as long as high inflation continues to plague the economy. Also, the government's over-interference in the guise of regulation is stemming growth in the corporate sector.
Mr. Puri, thank you very much for being with us here on ET Now. I'm going to ask you the 10 tough questions that this economy is facing every single day. And I'll start with the first. What is it with the inflation monster and how hard is our task going to be to manage it?
See, inflation, as you can see, headline inflation is an issue. Core inflation to some extent has subdued. But food inflation carries on. Unless we get a reduction in imported inflation, oil and commodities, which is being negated by our depreciation in the rupee.
Yeah.
I think you have to learn to live with about a 7% inflation. And if you can manage that much, it should be good. But while you're on it, I don't understand the structural food business, etc. Because being with a farming background, it can only be one harvest. No, if you're growing the wrong crops, unless you've not given them the right incentives, or they have other risks which they don't want to take.
But are we making too much out of pulling inflation down to what is a 5% level? Is that become an unrealistic figure to chase by the regulators and the government to sort of go around with?
I think overall we do very well if we started giving out realistic figures. I am not the best economist, but my common sense tells me 5 is out. And I think we should say that categorically. And I actually don't see anything wrong with a 7 to 7.5% growth rate. To run at about between 6 and 7 for a while, I don't think is an issue.
With the RBI having done this one rate cut, do you think that that is it for this economy for the moment? Because none of the parameters give the RBI the elbow room.
I do believe that the ability of the Reserve Bank to cut interest rates in the near future at this point is probably constrained to some extent by headline inflation. But they could also, on the other hand, take a bet that the rupee will come back a bit, and so inflation should go down.
Do you think that the whole tight liquidity scenario that RBI has kept up with has actually hurt investment as well? So it's sort of showed through now in the cycle, because anyone would use a crisis to add to the investment pie. But we haven't seen that happen.
See, I don't think the tight money has really, a lot of people blame only the tight money. It could be one of the factors. But more importantly, we must understand that what is happening at this point of time is between when they have to take action to support the rupee, etc. We're not getting 15% money supply growth. If you don't get 15% money supply growth, you're not going to get 15% deposit growth, which will constrain given your credit deposit ratio. So the issue is there is not enough money supply creation in the economy, which will lead to greater deposits and a reduction in interest rates.
So the weakening rupee is the other factor that the economy right now is grappling with. And while there's talk about the worst case scenario to 60 and a better case scenario to hover around 54 or so, where do you see?
I think somewhere in the low 50s, the rupee was due for a depreciation purely on interest differentials. It's mathematical. You have a higher inflation, you have higher interest, then what you gain on interest, you lose on the currency. So somewhere in the low 50s is where the rupee should have been. And at that level, I think the market had priced in all that your 10 points probably cover. What has happened after that is global factors, the 2 to 3 rupees. And whenever these things happen, they tend to overshoot.
Do you think allocation of natural resources, something that India has always looked on upon as one space which has plenty of coal, the fact that we've not been able to execute it is where half the trouble lies, not just for power, but for investment cycle itself?
I agree with you totally, yes. The outside world is waiting to invest into India. They don't have that many alternatives. Let's make FDI easier. Let's take these simple decisions which everybody agrees needs to be taken, and get our rightful share of the money instead of making pain for ourselves. Now you know Greece in August they have that, and there's going to be so much more uncertainty. There's no point panicking and taking all your measures at that time. If you have to take them now. It will be far less painful.
And prepare for it.
And prepare for it.
Will the banking sector take a hit because of large corporations like these, which it may have exposure to, which do not have fuel supply agreements, taking them to the next place?
Purely as an observer, because we don't have exposure there.
Yeah.
I think will we go through the cycle of restructuring and some hits? Yes. But you would also agree, Shelley, that demand exceeds supply for power. So at some stage, we have to get these facilities which have got 90% of the investment on the ground working. Or
we're giving business to other countries.
Or we're giving business to other countries and we're leaving a productive asset dead and we're creating problems for the banking system. So I think they will, this natural progression of an analyst from restructure to bad loan, I disagree with. Some increases in the NPA, I agree with.
Okay, you agree with that. Let's talk about financial reform, something again India has talked about in principle, but not quite done it, in Parliament at all, whether it's insurance or banking reform. Do you think that is a story that's probably a little overhyped and we're not desperate for those reforms today?
I think those reforms are not necessary at all. I think we should stop talking about it. I even think FDI in retail is more a proxy for sorting out the supply chain, and it could accelerate it. But if you think Walmart is going to solve your agriculture problems, you're smoking.
This is something that corporate India in the past has learned to live with. They have grown despite the government. Today that story is dead. Corporate India is unable to grow despite the government because their core issues, as you said, fuel, land and environment. What will this do to investment in general in India by Indians?
Two things. Firstly, I think this was a misnomer that came about, that corporate India can live without government.
Okay.
These two have to work together.
Okay.
It survived without government because the world was booming.
Okay.
So like they have the old saying, a rising tide hides the naked as well.
Yes.
So I think this was a misnomer that corporate India can survive without the government. If it could, then why are you trying now? So that was the rising tide that they took it. I think even this business about Indians investing outside of India is a bit overdone. Compared to the total size of our country, the amount of investment that's gone overseas is peanuts. At the same time, I don't want to become a part of this rhetoric going here and there. I do believe we have good businessmen.
Is our country over-regulated, or do you think there's some spaces that actually need regulation? Power and real estate are, for example.
I think regulation is required by human beings. That's the nature of human society. Over-regulation is the issue, and I think we have over-regulation, which then leads to, if you have too much regulation, then it leads to the license, permanent corruption, all of it. And in some places, we don't have any regulation. So, balanced regulation, if we revamp it and come out with a clean slate, then I think that's good. Over-regulation is bad. And a lot of our rules actually are still from the British era.
Exactly.
So they've gone, citizens have no rights, so it's all the laws are intended to be that I can arrest you if you walk.
You think that with this kind of a situation that we are seeing, 24 months to the next elections, where there will only be one more budget and one vote on account, will there be tough decisions according to you taken despite this political compromise?
I think they have no options. Indians work best on the political and regulatory side when we have no options. Frankly, we don't have an option.
What are your growth expectations? I mean, large number of global firms have come out and downgraded India's growth expectations.
Somewhere around 7% with some deviation either side.
Right.
But if we get things right, then it may Let me give you another scenario. What if the rupee corrects? What if we take these actions?
Sure.
And the commodity prices are down? Then we're doing 7.5.
But there's so many ifs and buts. I know there's always the environment to factor in.
Baba, half full glass. No, it depends which side you look at it.
Surely, but what sectors you expect will drive growth? Manufacturing is actually focusing on export right now because of the rupee, because internal demand is there.
But they should. We're one of the only countries that's so worried about the currency falling. A lot of them, like China and all the export-related currencies, are looking to a fall in the currency. I'm not advocating that. I'm just saying, for instance, if you look at auto ancillary supplies, they require investment. They're fully utilized to capacity.
As we come to the close of this episode of Surviving the Slowdown, it's pretty clear that there's plenty of optimism among the bankers. But in the environment and the economy, the pessimism and the negativism very much exists. Particularly in the last few days, without a rate cut, the economy hasn't had a reason to cheer up. And this is a story that's likely to repeat itself even as we go ahead, until reforms are really put back on track. With that, it's a wrap on this episode of Surviving the Slowdown. Thanks so much for joining us. See you same time next week. Bye-bye.